beyond ludicrous that the Democrat would say right now that they have no hand in how it's, in fact, it's a bald-faced lie, and they continue to lie to the American people because up until now, they've controlled the media complex, and so people believe them. But that's changing, as you know.
Well, here's the thing. Look, inflation comes from one place. You just outlined it. But let's make it crystal clear so nobody misunderstands. The government creates inflation, Terry. You don't. I don't. The people watching this program don't create inflation. It's the influx of mass amounts of cash into a system that didn't need it, didn't want it. And yet this Inflation Reduction Act pushed in more money. And the American Rescue Plan pushed in piles of money. Before that, Donald Trump pushed in, a bunch of money to try to offset the problems of the pandemic. But what they have created is a cure worse than the disease, because we're in real trouble now, aren't we?
Well, the national debt is over $31 trillion. So, they're in a tough spot because if they allow interest rates to continue higher, and really it's not continuing higher, it's staying higher, that's going to be the problem. I mean, if you look at $6 to $7 trillion of that national debt is short-term debt. Well, guess what? A 1-month treasury today is over 4%, or a 3-month treasury is over 4%. Okay. So as we see these 1-month and 3-month treasuries rolling over, they started the year at near zero, and now they're at 4%. So $6 to $7 trillion is going to get refinanced from zero to over 4% in 1 year. And by the way, interest expense on the debt was the 6th largest line item. So it's
going to climb.
It's not sustainable.
It's going to climb the ladder, and that's always been the danger, isn't it? It's the interest on the debt that will gobble up bigger and bigger and bigger chunks of the gross domestic product, of the work that we do in this country. It'll undermine our economy. All that interest on the debt, that's the real danger. So let me ask you, looking into 2023, recession, is that what you're thinking? What are you expecting?
Well, right now, the way to kind of judge a recession, when the 2-year treasury is higher than the 10-year treasury, it kind of tells you that a recession is coming. When the 3-month treasury inverts, it tells you that a recession is essentially here. And guess what, Steve? The 3-month treasury inverted this week. Now, it's gone back and forth a little bit, but the bottom line is we are on the front door of a recession. So I think it's inevitable at